Norman Chan. He's Chief Investment Officer of Banyan Asset Management. Norman, thanks very much indeed for coming in. Let's just talk first of all about the interest rate move, and just put it to you that it takes time for an interest rate move to actually take effect.
Yes.
And people are suggesting that, well, we could see inflation in China peaking in the next 2 months. Are they behind the curve?
No, I think still reasonably optimistic that they should be able to control inflation in the second half. And of course, they're still waiting to be seen, whether they would be able to achieve what they have expected to control inflation back below 5% for the whole year.
I think their 4% is their target, isn't it? And they're saying it's very difficult to get it down there.
Yeah, I think the official target is still 4%, but the real target is now much more like 5% or below. And so far, we've seen that there has been some major slowdown in manufacturing, as so as the PMI index, and also we have seen a major drop in money supply growth, especially in M2. So there's a good chance that inflation would be able to peak out in the second half. And if that happens, I think the market would be able to rebound further or even resume some upward rally.
Well, I'd like to know what the market here in Hong Kong, and particularly the market in Shanghai and Shenzhen, what is actually priced in right now?
I think the market is quite scary, about the tightening, and especially since we have gone through a lot of tightening in the first half, not just the interest rate hike, but more importantly on the reserve requirement ratios increase.
Do we get more of those?
I think there is a chance for further increase in RRR, and although it's already record high, but we have seen many record highs in the past few months already. But I would say that the tightening cycle is probably near its end, and if that happens, then the market will be able to relax a little bit, because it has been priced in a very, very severe tightening.
Does it also look at what's happening in the rest of the world? Of course, we've got squabbles over bailouts and debt ceilings in Europe and the US, respectively.
Sure. I think the Hong Kong market is also affected by the global market. The China market in Shanghai and Shenzhen is a little bit less, but still, on the long run, the sentiment would affect them.
Right. We're not out of the woods when it comes to Europe, are we? I mean, Portugal at the moment, you can see that the mood music, the background noise there is getting louder and louder.
Yes, and I think European problem is still going to be here. And for the next 2 months, before the end of summer, maybe the market can take a breath, especially if, Greece would be able to develop further. But of course, in the next 2 months, if the government and the central banks in Europe cannot arrest market sentiment from falling further, then maybe after around September, then people may worry about other European debt problems. Portugal is one clear example.
Well, I mean, downgraded, of course, jumped by Moody's the other day. Then we have these complaints from European Commission President Jose Manuel Barroso, which almost it's like a red rag to a bull, really, doing that.
Yeah. When
it comes to the markets, it signals up all sorts of things that the alarm bells are ringing after all.
True, and I think the European debt crisis, as long as stay within the PIG, not affecting Spain and Italy, and I think the Asian market as well as Hong Kong China market would not be too much impacted in the future. But I think for the rest of the year, once in a while, the European problems would be an excuse for the market to correct or maybe take a breath.
Norman, what about the US? I mean, will they sort this debt ceiling out, or do you think it's just a game of brinkmanship at the moment?
I think it's still pretty much a game of brinkmanship. In the past 50 years, we have seen at least like 50 such kind of incidents, which none of them has become a default situations. And it's a political game, and that's really it. I think the problem, the bigger problem in U.S. is about whether the employment growth has been
today,
able to.
Of course, non-farm payrolls are crucial data out later on.
Let's hope that it is as good as the ADP numbers. And if that's the case, if we would be able to see 150,000 or even above 20,000 jobs creations in U.S. a month for the rest of the year, then I think the U.S. recovery is very solid, and that would mean that we will be able to see U.S. market re-rate a little bit further and to reach around 1450, and that would also help the sentiment in Asia as well as China. Yes.
Norman, thank you so much for coming in.
Sure.
Norman Chan there, he's from Banyan Asset Management.